All right, traders, welcome back. This is the daily recap on August 22nd, 2023. We are looking at the MNQ, which is what I traded today. Let me share my screen here. I pretty much trade the NQ every day. I will do the MES as well, as depending on the action that I see in the morning. MNQ tends to give me a little bit more setup, so that's what I'm looking for to get in the trade. Just kind of a recap where we are in the week. You can see this is our close, our low of the week last week on Friday. We actually hit a low, rebounded off it, closed up a little higher off that low, and then Monday had a great day, full green day, our first green day in the last four, and so set the stage pretty well. Tuesday, we tried to push higher. It pushed higher in London, but then retraced all those gains in the U.S. session. So the question is, where are we going from here? So looking at this on a 15-minute time frame, I'll show you kind of the trade of the day, if you will. If you were able to get this, I didn't get it, full transparency, but this was the move. You can see here's the Asia sort of range, those first 3-hour range from 8 p.m. to 11 p.m. Eastern. We've got the London session here marked in orange from 2 a.m. to 5 a.m. And the market just really went vertical in Europe. And then as U.S. market started to come alive around 8:30, market just kind of ran out of gas and sort of rolled right on over, almost like it knew what was coming at 10 a.m. with a bad existing home sales number. Maybe somebody got wind of that, not sure. But more than likely, what we saw was you had, a breakout from the Asian session where the market went vertical. And so now we're looking to, the market was just reversing path to stop hunt on the way down and clear out some of those longs, those weak longs that were in Europe and or from the Asia market. Here was the trade, though. We had a little peak formation come in with a reversal. Market just went south right at the open. So you can see here, if you were quick enough and savvy enough to get in on this trade, it was a fast move down for about 350 ticks. Right off the get. So that was the play of the day. You're in, you're out before existing home sales came in at 10, which turned out to be pretty much a non-event. The market sort of moved in a 50-point range for about 2 hours after that, up and down, up and down, up and down. We did set the low of the session, or excuse me, the high of the session, obviously in the U.S. session. If we look at the 5-minute chart here, we can see here's that first 1 hour of trading. Let me just get to the far right side of that. You see we got the first 1 hour of trading. There it is at 10:35. We broke lower, closed below that first 1 hour. And if you're not aware of that sort of the thesis behind this, there's an 88% probability that after the first hour of trading, if you get a 5-minute close above or below the high or the low of that first hour, then the high or low of the day is likely in place. So in this case, we closed lower. Therefore, our high of the day likely locked in. Doesn't mean we're automatically selling for the day, right? Because you can get those days where the market can, come down, hit a low, and then go straight back up and either close at the high or close just below it. So remember, it's not 100% guarantee. It's just a high likelihood that a high of the day is in place. Again, it doesn't mean you're always looking at shorts, but if we're trading the hard right edge, we're looking at a couple of things. We've got these peak formations here, market push down on that initial move and that initial reversal. We tried to come back up, failed, tried to come back up, failed. 10:35, we set the new low, highs locked in for the day. Now we have to think, okay, where is a good place to get short? So we'll move the market ahead, looking for a setup, right? We want to look for a good place for a reversal, not just trade breaks. Obviously, if you trade breaks all the time, breaks can break you. So you have to be careful on that. Now, in this case, it would have ended up just fine. You would have had to go underwater with a pretty deep stop, but you would have been okay. But the better play would be to wait for, as you can see coming up, a third peak formation with a reversal pattern here. We got this 3 candle reversal. Market is heading lower. There's the play of the day. You get a little bit. If you get in at that third candle, you're looking at roughly about a 120 tick stop. Not too bad, given the fact that you're going to make about 220 to 250 on the move down. 293, sorry, was off a bit there. I only squeezed out 200. My target on this move here was the London low. So I was looking for that London low number. I didn't get all the way down. And market ended up going all the way down. If you look here, it went all the way down to the Asian session low, broke that low, and then just sort of went sideways for the rest of the day in that range. So you could have tried to trade that range, but it's so difficult. If you're looking for a reversal, trade out of here, which you have one here. Maybe you get lucky here, but when do you know to get out? The market rolled right back over. So even if you get in on this reversal where we got, this little reversal pattern here where we got some engulfing candles, if we are up, we better be moving our stop up, because as you can see, the market came right back down lower than where we would have gotten in on the reversal. So it's very dangerous trading those reversals on these break lows. On the days we're heading lower, right? We know the high's locked in. We've had 1, 2, 3 tries to the upside. We've extended down. We broke the Asian low. Obviously, we're trying to set the market's trying to set newer lows for the day. So you got to be cognizant of that, be looking to go short when you can go short. So there's really not a whole lot of moves in here unless you're excellent at timing. You could have had a sort of a range trade if again, you're looking at this in hindsight, but if you're looking at it, in real time, let's go this way. You could have maybe been thinking, well, let's sell at the high if we get back up there. And you can see it breaks it. Maybe that spooks you out of the market. Maybe it doesn't, but you would have had a nice little move back to the downside right there. But I am notoriously bad at timing those plays. I'm either long when I should be short or short when I should be long. And it is just a nightmare. So I'm trying to look for better setups that I can get long runs out of. Potentially, I love trading when I can get either a good, strong reversal out of a trend, like we saw this morning here on this break. It was easy pickings. Or even on this one where we had the 2 peaks. We knew the high was locked in. We looked for a reversal and we're in. And boom, that was our trade. So on the day, 4 total trades, 3 winners, 1 break even, no losers. So great day. I'll take it. 275 ticks on the day. There was a lot more that I left on the table. But only because I'm not a prophet. I don't know how far it's going to go. I'm looking for probabilities, and I'm just like you, fear and greed overwhelm at times. And so if the market's not moving fast enough for me, sometimes I'll scratch out a bit early, and sometimes I push it a little too hard and get too greedy and end up having to eat a little bit of my position because the market just ripped back on me or ripped in the other direction. And I may have had a 200-300 tick winner that I have to scratch for 200 or 175. So that leaves money on the table. So try to avoid those. Don't do as I do as I say. So looking forward to tomorrow, what we can look for. I think the market's got a decision to make, right? Statistically speaking, the high or the low of the week is probably in place already. If we look at this range of where we're at, so here's Monday, Tuesday, right? These 2 candles right here, either the low is already in place or the high for the week is already in place. So the options for tomorrow are quite simple. What is, a high probability would be that we would maybe get an inside day, right? We get this kind of range. Maybe it breaks out. even in both directions, chopping, looking for some direction to coil, or we'll get the breakout in either direction. So we'll get a move up to the high of last week, which I think is a fair estimate. We could do that unless the market just rolls over. I think if we break this low, if we're looking at, I'm looking for shorts under 920. So under the low today, looking for shorts back down to certainly the week's low, maybe last week's low. And if we get out of this range, looking to extend it up to last week's high and maybe even beyond. So those are the two key levels to watch: 15,120 and 14,920. So you got about a 200 tick window where you could see some just bouncing around, my market coiling up a little bit, waiting to go in either direction. Not a whole lot of news that I could see on the horizon for tomorrow. It looks like we've got manufacturing PMI at 945. So be careful on the open. Might want to stay out until about 10 o'clock and see where the market takes you. A lot of overnight news in Europe. So they got PMI, services PMI in both Great Britain and Europe. So that's the recap for today. And I'll look forward to seeing you guys all tomorrow. Trade safe out there.